All right, we're back in the trenches. We're going to go to regional banks today. Scott, usually we go to the big ones. We're going to go to the little ones. And the reason why I wanted to bring this up is because I've been hearing a lot of chatter that these would make better investments. They'll be subject to less capital rules than the big banks. They'll also then be able to lend more because they won't have to keep as much cash. And we're also seeing an emerging trend about regionals buying smaller banks. We saw that on Monday with PNC officially buying RBC's U.S. retail unit. So I wanted to get into these to see if they make good investments and good trades. So let's start with PNC.
Okay, I want to take a look at these charts because I have not looked at the regional banks in a while. I've had a hard enough time buying the big banks. So maybe there's something to this story. Let's see if the charts actually coordinate with that thesis. If you look here on PNC, I don't think so. It tried to hold up. It tried to hold this big-time support, which now will be a brick wall of resistance. It did hold here. I think this has a bounce back to 58, maybe 59, but this chart has a lot of work to do.
But it does seem that there are some fundamentals with this acquisition that it's going to make that's going to be good. I mean, it was $3.4 billion, which is definitely cheaper than a lot of the other acquisitions that we've seen. It won't be accretive until 2013. We'll see a lot of noise because it won't finally close till March 2012. But during that time, there might be some good buying opportunities. Well, as an investor, though, even though as a trader, is this at all interesting, or you have to wait till you see some kind of bounce back up to that 56 level?
I think traders don't like noise. Investors don't like noise.
No one likes
it's
noise.
just noisy, and this chart looks very loud and noisy. So this is an area that's going to pose a problem. Then this one, I think there has to be cleaner, more regional banks out there. I think we need to take a look at a few others.
I want to go to BB&T because BB&T actually lost the bid for RBC's retail units to PNC, and its mortgage business makes up about 7% of revenues, with the largest segment, community banking, about 60%, which actually I wonder could be a positive thing for this company. I've also heard the word inflection point a lot.
I like inflection points.
For this one, so I wanted to see what you
action.
thought about it.
This one actually looks better. Okay, this one put a high in. It's holding the 200-day. Still has a lot of noise right here, but if this starts to clear 27 or just say even 27.50, it has some clear sailing back to the high. So if you have to choose one, maybe they like the fact that they're not making an acquisition and they're not making it tougher to see the books and see what's going on. It's cleaner. So maybe by making the acquisition, it wasn't a good sign for PNC, and it could have a better move for BB&T because there's just less things to look at.
Although apparently they will be on a lookout, so we'll watch that for maybe a negative kind of catalyst.
So let's find what they're looking to buy, because that usually goes up.
Right, true. Who can play the takeout rumor there? And I want to do Huntington Bank shares here because it's sort of the creme de la creme that I'm hearing of the mid-tiers. Okay. It's going to hold less cash in reserves. Like I said, can loan out more. A Goldman Sachs note actually highlighted Huntington as well as Zion and East West Bank, saying these are good buys. I'm going to quote them here. Given their potential to price loans at a lower yield and generate the same risk-adjusted returns as the big guys, stock was added to Goldman's conviction buy list. So let's look at it.
Let's take a looky. A little looky. H-band, ooh, look at that. Nice little tight lower wedge. Obviously well off the highs, constricting. You can look at this a little closer. And right now, if this gets above 650, I think you can invest if you want a regional bank exposure. I think you have a nice percentage move back to resistance around 690. And then this one looks okay. This one at least is a tight range where you could see a point of reference how to get in to see if it resolves to that upside.
So after we've taken a look at a couple of these charts, would you be interested as a trader, or is this really for the investor?
These things don't move fast enough unless they're in vogue, and right now, no bank stocks are in vogue. So if you want to invest in something and park money, maybe you park it here, you'll feel safe, but that's not the approach that I take.
Well, you brought up the big banks, so I want to go and kind of compare the difference because we've looked at a couple of the regional banks. Let's compare, the JP Morgans and the Goldman Sachs to see how their charts match up.
Well, it's funny that the big banks were starting to show relative strength when the market was moving lower, and then yesterday we had the big pop, and they didn't do much. JP Morgan, if you take a look here, not that compelling. It's still below the 200-day moving averages where I just showed you so many things above. I guess if this were to get above 41, you can go back to 42.25, but there's so much noise here that it's hard to get involved. We want to make excuses to buy JP Morgan, Bank of America, Wells Fargo, but every time you do, they go nowhere. So we need to see something change there.
And also want to see what happens with the Fed decision and Ben Bernanke press conference.